All right. Hey, Darren, how's it going?
Hey, Joseph, doing well, my friend, doing well.
All right. Give me a sec here. Okay. All right. So, first of all, everybody, thank you for joining us today. And please be a little bit understanding with me. I'm not feeling too great today, so I am working from home, hence the baseball cap and all the other stuff. But I really appreciate you guys coming on today. Darren is with us from List Reports. List Reports is a marketing service for realtors, and he's going to go over all the particulars of that. And then once we get that finalized, Darren, you got probably about a half an hour or so. Okay.
Mhm.
And then I was going to do a mortgage 101 class going over some basics that you guys should be aware of when it comes to how we do pre-approvals and the different programs out there. Um, and if no one has any questions to start, I'm going to turn it over to Darren.
Awesome. Thanks, Joseph. And thanks everybody for getting on the call today. For those of you that have already used list reports in the past, hopefully today might shed some light in some different areas that maybe you weren't aware of. But also for those of you that have never seen list reports before, please feel free during this 30 minutes just to pop in, ask a questions. I love being conversational, so don't worry about ruining my flow. You can't do that. Just go ahead and knock out the question right away. Keep it really informal here for you guys, okay? So just to give you a brief background of how the platform works for you is that when you have a list reports account, we are going to help you with not just marketing for your listings, we're going to help you with your social media presence as well. So what Joseph has done by signing up for list reports and offering this to you guys is one, looking for a way to help you guys be able to solve multiple pain points. We know that time is one of your biggest assets that you don't have a lot of, never have enough of. And so when it comes to social media, for example, finding the time to look for content, create content, you just don't have the time to do it. So with a list reports account, we're going to provide you content on a daily basis. We're also going to give you access to our content from back when we started doing social media content back in October 2019. So you have access to the entire library, and we allow you to download as much of our content, use as much of our content as you want to. So it's a great resource for you to have access to because when it's free, that's never a bad thing. There's no cost to you. And then secondly, there's some automation in play for you as well when it comes to the marketing kits specifically. So when you have a listing go live on the MLS, what List Reports is going to do is automatically create your marketing kit for that listing and deliver it to you within 24 hours. Our target time is less than 1 hour, which we do hit in some areas. Some areas might take a little bit longer, but also too, if you have listed a property and you haven't gotten your report in 24 hours, you can just let myself know, let Joseph know, and I can make sure the team gets it out for you. You don't have to do anything yourself, is my point, right? We don't want you to have to think you have to log into your account and request a marketing kit. Not to say you can't do that. And as a matter of fact, we allow you to do that. And we encourage those of you that, for example, maybe have juniors working for you, or if you're a newer agent, you're going to host an open house for a listing that's not yours. As long as your broker, your agent gives you permission to create your own marketing kit, you can do it. And it's really simple. So this way you can have flyers at the open house that have your information on there. And it's as simple as literally just typing in the address and selecting it from the drop down as soon as you see it in the Google search, because that's what activates our MLS search. And then you just have to click this tab here that says you have permission from the listing agent to promote their listing, hit submit, and then within about 10 minutes, you're going to have a complete marketing kit that will include not just your flyers, it's also going to include digital content. So it can help you promote the fact that you're going to be in an open house this weekend. We have this digital content you can use to promote your open house schedule to Facebook. And these digital postcards that we create for you are also lead capturing. We give you different templates that you can use. We give you the opportunity to either include the address on the visual or not include it. I know some brokerages require the address to be on there, but for those brokerages that don't, I know a lot of agents like to keep this off there just to kind of add to the mystery. Well, where is this property at? Because what you can also do with this here too is you can tell the viewer to click on the image, right, to see all the listing details. And as a matter of fact, we give you captions or suggested captions you can use to help you promote that listing. You can see here, come see it in person, click on the image to see all the listing details, right? And you can just simply do that by clicking on this copy caption. This way, when you go to the Facebook hyperlink share right here, which you can do personal or business, hopefully you guys all have business pages. If you don't, you can still do it to your personal page. And then from here, it will upload the image for you into here. And right here where it says what's on your mind, this is where you just paste that information and you're off to the races, if you will, right? So very simple to do and very easy to use. And then once you've done this, obviously, when a consumer clicks on the image, what happens is we take them to a single property website where they can see all the listing details for your property as well. Okay. Now, the other piece of this, and with all the social media content, you notice here, and this line here says choose your branding. Well, you can add more personalization to it just by adding a background, which when you do the branding is also going to include your contact information. It's going to have your company logo here, and you can add taglines in here, right? Come meet me this weekend at my open house. You can create as many taglines as you want to. I've seen some realtors use this as a very creative and smart way to have different days of the week, right? Happy Thursday, come, whatever the case might be, or you could use this to your, again, advantage of making some more personalization to it. So this way, when you're doing, for example, our daily shareable content, you don't have to worry about the fact that maybe everybody in your office is sharing the same shareable on their Facebook page, right? Because two things to keep in mind with this is when it comes to sharing on social media. First off, is you guys all have your own sphere of influence, your own viewers, right? So it's okay if you're sharing the same content. Secondly, you can add the personalization to it so it will have its own flair. Now, one thing I want to point out to you about the branding, so when you do get in here and look at the branding options, the different color themes, I want you to just know that these are strictly color themes. So you'll notice we do have like different major brokerages. Matter of fact, we have Keller Williams in here. Now, that's not adding Keller Williams information. I mean, you're already Keller Williams, so you have that on there, but it's just using the color theme. But some color themes don't look that great behind that shareable, right? So you can change it up. If you like the Iron Valley Realtors theme, you can use their theme. But again, it's not putting anything about Iron Valley on here. It's literally just using their black and orange theme. Makes sense? Okay. Now, going back to the marketing kits, what we also do, and the reason we give you 25 pieces, everybody, is not to overwhelm you with content. Is to make your life easier, actually. So you notice here we have this filter by. Essentially, the marketing kit covers every life cycle event of your listing, and we give it to you all at once. So you've got your just listed, you've got your open house materials. You click on the filters and just content that would be applicable to use or okay to use will be available to you. So when you go under contract or into escrow, you can use this as well. So essentially the flyers, they all look the same, okay, have the same basic theme to them, but then we'll have the different captions on the top. So whether it's an open house or just sold under contract, whatever the case might be, that's what we'll show on here. Okay. And I think you guys will agree as well with regards to if you've never seen our material before, just aesthetically, it's very attractive, very professional looking. It's easy for the consumer to get all the information on there, but also what we do include too, because of your relationship with Joseph, is we include lead capturing on here, right? QR codes, text to lead codes. When a consumer does either one of these two activities, we are going to send them a link to the single property website that we created for your listing, your specific listing, right? And you will get a text and email notification within 10 to 15 seconds. So literally you can call the consumer while they're looking at the single property website of yours right there and then. So it's all about helping you maintain that control over new leads because, the rule of thumb is what, 5 minutes, 10 minutes from a new lead, you want to contact them. So we're giving you this information within 10 to 15 seconds. So it gives you an opportunity to do what you need to do and reach out to that consumer. Now, these are two-sided flyers as well. So that's the front of the flyer. The back of the flyer has our infographics, which shows the consumer what's nearby, area conveniences, what schools are tied to this particular listing, what are some popular outdoor activities around the area, and then neighborhood eateries. Now, just so you guys know too, is one of the things that come across also is what if I don't want ratings, or what if I don't want these schools on here, or what if there's some other outdoor activities that I would like to share on there. Well, you do have the ability to edit that information as well. As a matter of fact, you can either when you go to edit it, if your listing is in an area where the school ratings are just not good, you can remove the ratings, or you can remove the school infographic altogether. Or, for example, I'm just waiting this for the thing to load here. Or if you have a brand new school in the area that we don't show in the dropdown, right? You can add and edit all that information here manually as well. So yeah, this was not even giving me options to do a drop down. So if there's a new high school in the area, maybe my computer's is going really slow. Oh, there we go. Now I have a drop down, but still the same thing. So if you have a new high school in the area, I can just go into here. I can just type in, academy school, whatever the case might be, right? I can type that in there, save it, and that'll be on there. Here's where you can remove the ratings, toggle them on, toggle them off, or you can completely remove the whole school infographic if you want to. Here's an area we can add and put in different types of areas that you know are nearby that property if we did put it in there, because we are just using a third-party service to populate this for us on your behalf. And so a lot of times they don't have the most updated information. I think most of the information is supposed to be updated within no more than like 45 days old, but you just never know. But just so you know, you can make those edits on there. The other edits you can do as well is you can, for example, change the photos we selected for you. Because remember, we're doing this for you automatically. So we are just using your images from the MLS that you uploaded, but maybe you don't like the kitchen shot we chose. Maybe you prefer this one instead, right? So you can make those changes. You can also, for example, add more photos. So if you don't like the look that we have with the main picture and the two photos in the bedroom and bathroom blocks, you can make it all photos. So this way you can go in here and make it so that all 5 spaces will have the photos on there instead. Okay, so again, a lot of flexibility when it comes to what you can do with editing the report, including adding promotional text on there. You can put, open house times on there. You can even change if you don't want to display the price, or if you want to do a price range, we'll give you that option as well. Okay. So I want to pause real quickly here. I don't see anything in the chat, but I wasn't really looking either. Does anybody have any questions at all? Questions? Okay.
Buddy? All right, guess not, Darren.
No questions. All righty. All right. So going back to some of the marketing kits, and one thing I wanted to point out for you guys as well, and this kind of ties in with the social media, is we have something called list packs, which is a way that you can showcase active listings based on themes. But these websites, or 8 websites in general, we also tie them together on your single property websites. You'll notice here on the top of this page here, it says see similar homes. So that consumer that just scanned that QR code on your flyer looks at this, sees your property, beautiful home, but maybe it's missing something for his family, right? So they're going to usually go to Zillow, Realtor, whatever, right? It's just consumers are just kind of trained that way. And this is why we tease them with this big red tab, because we want them to look at other homes in the area, but on a page that's dedicated to you. So we're doing our part to try and help you protect that lead as well as possible. So it's branded to you. It doesn't matter what listing I look at, it's always going to have your information on here. And we do disclose who the listing agent is because we have to. However, we don't have to send that listing agent your potential new lead this lead's information. So that lead can fill out this card saying, hey, I'm interested in looking at this property, and that will go directly to you every single time, no matter what listing the consumer looks at. The other piece in this too is, let's say they start looking at other areas, right? They can type in other cities, they can type in other zip codes, they can go in here and play with the filters just like they would on those other websites, but it doesn't matter what they do. Every time they hit the contact me card, it's going to go right back to you every single time. So we're doing our part to help protect. Obviously, there's no way to 100% guarantee it, but we're trying to help you. Now, these websites here too, like I just showed you, this tied to the single property website, is also something you can use on social media. So it's really important that you're not just posting stuff on social media just to post. You want to post content that's going to get engagement, especially as an entrepreneur, a professional real estate agent. You're all self-employed, regardless of where you hang your license. You're an entrepreneur. So using social media to your advantage where you're getting engagement is extremely important. So what we've done is we've created these curated themes of websites to gauge interest and spark the viewers to want to click and engage and look at the homes, right? what consumer doesn't like to look at properties other than just to look, right? So I live out here in California. There's homes with pools. I'm already starting to see some of these come up, and some of my agents in the area using these, right? Because summertime's coming up. Here are some homes with pools that you might want to take a look at. And what's nice about this is you guys can create and add different market areas, and you can name them. So if you are working in multiple different areas or neighborhoods and different market areas, you don't have to do all of them at one time. You can, but if you wanted to separate them out, you can do that as well, right? So you have the flexibility to create as many market areas as you want. You can name them, and then this way, when you share it and post it, what's going to happen is the viewer will click on that image, that homes with pools, and it's going to open up the website that I just showed you. But now all these listings are, according to the MLS, homes that have pools. Okay. So the other piece of this, which is nice, is the fact that, and this is why I'm saying you can name your market areas, is we do give you metrics on which ones are working and which ones maybe are not working for you, right? So under the list packs section right here, it says my list packs. This is where you can see how well the different list packs you're sharing are doing, right? How many clicks you're getting, how many listings have been viewed. So you can see which ones get the most traction, get the most engagement, and maybe push those out more frequently. The one thing I want to mention to you as well, when you do post these live list packs, these are live, meaning that we're updating the MLS data constantly every single day. And on the list packs, they're updated twice a day, every day, 7 days a week. So if this listing here I'm looking at is active today, but it goes under contract today, when I look at tomorrow, it's not going to be showing up here as an active listing. And the other thing I want to point out to you guys as well, just with regards to consumer information, ListReports and MBS Highway, we do not buy consumer data. We do not sell consumer data. So all these leads that you're getting from our content, you do not have to worry about that information being sold to 8 or 10 different realtors. We just do not do that. That's not part of our business practice. So this is a safe space for you to use this information, use this content to help promote yourself. And like I said, more importantly, making sure you're getting engagement on your social media, because that's your ultimate goal, right? Now, you can also use list packs as a way to be, I don't want to just say more relevant, but just another way you can take advantage of the digital age to help your buyers when you're going to go show homes. So instead of just bringing a folder with MLS tear sheets, I don't know what you guys in your office do, but I've seen different, different agents do different things. Some are really, I mean, luxurious packages they bring to the viewings, and some are literally just tear sheets. Here's what we're going to see today. Whichever case, whatever you do, what you can also do is you can pre be preemptive with your engagement with the buyer and create a list pack specifically for that buyer that you're going to show homes to today. Meaning that you can go into the property search area, put in the parameters for the area that you're going to go view, select the homes under there that you're going to show that day, and then create a list pack for Joe here that you're going to go look at these homes today at, right? I got a couple of nice ones in there for you, Joe. 5 million, 5.9. There we go. And then I can text it to them. I can email it to them. I can text it to them. I can tell them, hey, look, here's a preview of the homes that we're going to look at today. Let me know if you have any questions. See you at 2 o'clock. And what he's going to get when he clicks on that link is a little preview of the 4 properties that you guys are going to look at today, right? And so, and you can see here, it's kind of fun. It has a little scrolling thing on here too. So when you're first looking at it, you can kind of get a preview of the 4 homes. Clicks on here, and now here are each of the listings that he can look at, right? Right there on his cell phone or on his email. But again, this is just another way you can take advantage of the technology just to add that extra level of service to your client. Okay. And then all the social media content, like I mentioned, is one, free. Okay. Secondly, you guys can, like I mentioned briefly, you can download and use all of our shareable content. So when you go to the shareable section right here, this will give you access to our entire library of social media content dating back from October of 2019. And the reason I want to tell you that is when you look at the daily shareables, going back to, I'm sure most of you have heard of Tom Ferry. Well, a very dear friend of mine, she's a trainer with him. She travels nationally with them. And for those of you who heard me talk about this before, I'm going to repeat it because this is something that they are telling agents right now repetitively. If you're not posting to social media 10 times a week, you are doing yourself a huge disservice. Your biggest supporters are those friends of yours, your families of yours that are on social media. They're also going to be your biggest referral base. So it's important that you remind them that you are a realtor. You'd be surprised how quickly they tend to just forget, right? So having access to content is a huge advantage for you from a time perspective, meaning that you can download, create a folder on your desktop, find different shareables you like, find 30, 40 shareables. Just take 1 hour of your day one day just to find the ones that you like the most. Put your branding on there, do your little thing, and then download it to your desktop. Then go to your Facebook business account, go to the meta page on there, and schedule them out. Do 2 a week, 1 a week, whatever your case might be, that will cover the next several months, if you will. And then, because you will be getting that daily email from us as well, that will give you access to the content, you guys will receive this email from us every single day. That's going to give you the most recent 2 to 3 real estate articles each day. Those are notables, our daily shareable content. This is the shareable that went out today. And if you like it, even if you're on your cell phone, okay, just so you guys know, there's no app to download for List Reports. It is a mobile-friendly, web-based platform. But you can be sipping your coffee at Starbucks. You say, "Oh, I forgot to post something today on social media. Let me see what List Reports has for me today." Well, here's a nice one. Purchasing a home, right? Click on the image. It's a smart email. It's also a live email. So what it's going to do is going to take you directly to your staging page of your account, right? You see here, I've got 2 different accounts open now. I've got my Robbie Silverio agent account, but I clicked on that image because I went to my Billy D. Williams account. Now I'm in my Billy D. Williams account. So now I can post this from my cell phone, even again, to my social media feed. So just remember, when you're getting those emails from us, it's not to bombard you with spam. It is designed to make your life easier. So I've got 7 minutes left, Joseph. I think I'm doing pretty well because I want to try leave some time for any questions just in case.
You're doing
So I
good,
went through pretty
Darren. You're doing
quickly,
good.
but yeah. Does anybody have any questions at all, or comments, thoughts? Anybody using List Reports currently that have any questions? Or and if you've run into issues, I'm not afraid to answer those questions either. This is about you guys, because maybe there's something I can help you with. So if you are using List Reports and you've had a problem with something, or if you have something just that you want to share with a group that you really like about List Reports, either way. Quiet group.
Well, I've been using List Reports for a couple of years now. It works great. Um, every agent that's paired with me, every listing they get, I always share it with a brief description that I take out of either Realtor.com or Zillow, and helps get some attention to those listings for sure. And it doesn't cost anything. It's fully automated, which really saves you a ton of time because you're not in there with Canva or any of that other stuff that takes more time. It's very useful. And if you'd like to sign up, just send me an email. I'm going to put my email address in the chat, but just shoot me a text or email and I will get you guys an invite right away.
All righty. Well, if you guys do think of something after the fact, you can always ask Joseph and he'll shoot me your question over to me and I can help answer it. And then, but yeah, appreciate you guys' time today. Joseph,
Thanks, dude.
if good with
Appreciate
you,
you.
and you can get to the educational piece of it. Everybody, I hope you guys have a great rest of your day, and also much success this year to all of you. Much success. Everybody take care.
Thanks, Darren. See you soon.
All right. Bye now.
Okay, so that was the first part of our class here today. I hope you guys find some value in that. And if you would like to sign up, shoot me a text or an email, and I will get you an invite over as quickly as we can after the class. So last half hour here, I've done this class now for quite a while. Just call it Mortgage 101. This is to give you an idea of kind of what we're looking at when we're pre-approving different customers, gives you some broad strokes overview of some different loan programs, the basics. And that's why it's called Mortgage 101. I did upload the PowerPoint presentation into the chat if you guys want to open that. Everybody able to open that? Sorry, I'm not the most tech savvy, so I appreciate your patience. Can I resend what, Casey? What did you need me to resend? Oh, the Mortgage 101. Yep, I'll get it for you right now. Okay, that looks like it's loading up right now.
Thank you.
Yeah, no problem. And thank you for your patience with me today, guys. I am not feeling great today, so working from home. But I didn't want to cancel on you guys. I appreciate everybody making it out today. That looks like it uploaded, so you should be able to access that now. You know? All right, does everybody have it up? We're good to start going over it? Okay. Got a response there. Okay. So as we open up the presentation, the first thing we're going to talk about is pre-approvals. And what a pre-approval is really based on. A pre-approval is based on three things: your income, your assets or liabilities, and your credit. Okay. For self-employed individuals, somebody that's a 1099 independent contractor or run their own business entirely, you're typically going to need your past 2 years of federal tax returns, all pages, all schedules we need to review. And I want to point out there are some exceptions to the things we're going to go over today. These are the general rules for most of your traditional lending programs. Yes, we have some outside the box stuff through our broker department that, maybe we don't need the 2 years on self-employed with some stuff like that. However, I'm doing really just the broad strokes on your traditional types of mortgages today. So self-employed 1099, or if they own investment properties, we will need to see tax returns. The thing is with the investment properties, we do need to see what they're actually, writing off from those rental properties, how much of the rental income they're actually counting. If they're not self-employed or have investment properties, then we typically do not need to see their tax returns. For your W-2 wage earners, we need your past 2 years W-2s, most recent pay stubs, and the end of year pay stubs. Everyone always asks, well, why do you need the year-end pay stubs if they have a W-2? And the answer is that the W-2 does not break down base pay versus overtime versus commission or bonus income. And if we're going to properly average out those incomes, having those final pay stubs from the previous 2 years is a huge help to us. Sometimes if we can't get those final pay stubs, we may even hold off on finalizing a pre-approval until we actually get a written verification of employment back from the employer. So those final year-end pay stubs are something that are very, very useful. Any questions on income documentation? Back and forth here between the Zoom and this. I want to make sure I'm not missing any questions, guys. Here. All right. And then we have assets and liabilities. We're going to go over how much money do they have in the bank? Do they have cash on hand? A lot of people do keep cash in their homes, and they don't realize that it's a big deal to just put the money in the bank and then try and use it for a real estate transaction. Because of money laundering laws and everything, and having to keep an eye on that, large cash deposits are flagged. Okay. And it's possible that if they just go and take a lump sum of cash that they have sitting at home and they throw it into a bank account, we may not be able to use those funds towards a real estate transaction. So if they actually have cash on hand, we do want to know about that. And we talk about how we're going to have to get that money into a bank so that we can actually use it. One gentleman the one time told me he had $50,000 in cash in a safe in his room, and he did. What we did to get around that was he actually got a gift from a family member and then basically just worked it out with them with the cash. Gifts are allowed. If there are gifts that are going to be coming in, we do need to know who is giving the gift, what the relationship is, and for how much. We always have to ask if they are paying any alimony or child support. We are technically not supposed to ask if they're receiving alimony or child support. I normally just ask people, hey, are there any other sources of income? And then they'll tell you. But alimony and child support, if you are paying it, must be disclosed, and that is going to get factored into what they qualify for, because that will be counted as a monthly debt. Does everyone know what a debt to income ratio is? Okay, debt to income ratio. There's two actually. There's what we call the front ratio, and then there's the back ratio. The front ratio is when we take your monthly mortgage payment and divide it by your gross income. That gives us your front ratio. Okay. Um, Typically, that needs to be like under 45, 46% tops. And you're typically only going to get an approval with a front ratio that high if they have minimal debt on the back end, because the back ratio, what we look at is your total mortgage payment plus all your other monthly expenses divided by your gross income. Now, depending on which loan program you're going for, there are different debt to income ratio requirements for each one of those programs, and we're going to go through those as well here shortly. And credit. We can do mortgages with as low as a 580 credit score. When we look at credit, there are 3 credit bureaus. The score that is used is the middle score. So out of the 3, you don't average them. We actually go off whatever the actual middle score is. If someone only has 2 scores because they have limited credit, we have to go off the lower of their 2 scores. Or if they only have 1 score, then that's what we will use. We can technically do a loan without having a credit score. However, it is not an ideal situation. There is a lot of extra documentation and a lot of extra guidelines that come with not having a credit score at all, but it is possible. In terms of credit, I have regularly helped people with credit. I started in the mortgage business 20 years ago now. And since day one, we've always been helping people with their credit. I realized that being able to help people with credit is a way that I could really increase my business and help my agents increase their sales. So I do consider myself to be a credit expert. A lot of times we can increase clients' credit score substantially. And it might not just be for them to qualify. I mean, they might have a perfectly good 700 credit score, but if I can get them to 740 and I'm going to save them 0.25% on their interest rate, everybody wins. So credit repair is something that I'm very, very good at, very well versed in it. So if you have any clients out there that are having issues with the credit, please let me try and help them. There's a good chance that we'll be able to get them turned around and hopefully into a home within, a short period of time. And I can't always guarantee, quick turnarounds with credit. I mean, some people have some really rough situations that might take a year or 2 years. But for those people, I schedule typically a monthly follow-up just to make sure that they're doing the things that we discussed. As long as they're doing all the right things and they're staying on the right track, I will keep following up with them and make sure that when they're ready, we turn them back over to you. Any questions so far? Okay, first program we're going to talk about is just your traditional conventional mortgage. Okay, minimum score to do a conventional loan is 620. So 2 of your 3 scores do need to be above 620. If you are a first-time home buyer, or if anyone on the loan is a first-time home buyer, you can get away with as little as 3% down on a conventional loan. If you're not a first-time buyer, then you're looking at 5% down for conventional. Mortgage insurance will be required if the borrower is going to have less than 20% down payment. The cost of the mortgage insurance for conventional varies, and that's unlike FHA or USDA that have set mortgage insurance amounts. The conventional really looks at what is the credit score, what's their debt to income ratio, okay? And that does factor in. So the larger the down payment, if you're doing 15% down, the mortgage insurance normally isn't too costly. If you're trying to do 3% down and you don't have the best credit, your mortgage insurance is probably going to be pretty expensive. And in that case, we may just look at going FHA or something like that. Conventional loans do allow for non-occupying co-borrowers, and they do allow for gifts from family as well as family, friends, things of that nature. Your debt to income ratio on a conventional loan, and this is your back ratio, so your total debt ratio cannot exceed 49.9%. Conventional loans will not approve with a debt to income ratio above 50%. Seller's concessions are allowed on conventional loans, but the maximum concession varies based on the down payment. I believe up to 10% down, so 3, 4, 5, up to 9%, you can only get a 3% seller's concession. Once you hit the 10% down payment mark, you're then allowed up to a 6% seller's concession with conventional deals. Here's something that I did not update actually in the Mortgage 101 class, and I just caught it. Multifamily homes typically require larger down payments. That's no longer true. Actually, it was the beginning of last year, I believe it was, or middle of last year. You can now buy a multifamily home with a conventional deal with only 5% down. For many years, you were looking at least 15% down for a two-family, 20% down if it was, or excuse me, 25 if it was a three, and 30% if it was a four. But now, with the new guidelines, you can do a conventional loan on a multi-unit property with only 5% down, assuming it is a primary residence. Any questions?
Yeah, I actually have a question about the gifts. How
Sure.
does that work?
Well, if you have a family member that would like to give you a gift, okay, we would have to get a gift letter filled out by them telling us how much they're going to be giving you. It will state what the relationship is. Is it your aunt, your uncle, whatever the case may be? And you're allowed to get a gift to put towards your transaction. That's really about it. They will need to supply proof of where the funds came from, though. They will need to provide us with a bank statement.
Okay, so it's more of like a check. It's not like an actual like it's a boat for 50,000, so it's an asset of 50,000 or something.
Yeah, essentially, that's how we look at it. I mean, you're getting a gift from your aunt, uncle, whoever it might be. That's $50,000. As long as we can document it, that's $50,000 that we can put towards the transaction.
Okay.
You know, pretty much all loan programs allow for gifts for primary residences. Keep in mind, when you're talking investment properties that people are not going to be occupying the properties, there's a totally different set of guidelines when it comes to investment properties. Okay. But if it's a primary residence, gifts, not a problem at all. Moving on to FHA loans, if no one else has any questions. FHA loans, we will do down to a 580 minimum credit score. Much more flexible once you get above a 620, though. So a lot of times, if I have somebody that's 580 to 619, we're going to do everything we can to get them to a 620. The fees are less, the rates are less, and there's a lot less guidelines. For example, you know, if you're a 620 or better credit score, FHA actually allows up to a 57% debt to income ratio, possibly. But if you're below that 620 score, you're not getting approved above a 43 back ratio. So it has a very large impact if they're below 620. We really try to get everyone we can to 620 or better. Yes, I have closed multiple loans with below 620 credit scores, but these clients have to have a lot of reserve money and they have to be able to provide a lot of other documentation. It's kind of old school, but we actually have to verify rent and stuff like that, which most loans nowadays, we don't have to verify rental payments. We used to have to do that years ago. And if it's below a 620, those are the types of things that you can expect. They'll probably have to provide some utility bills as well, stuff like that, so that they can make sure they're paid on time. FHA requires only 3.5% for down payment. All funds can be gifts, and non-occupying co-borrowers are allowed. I do want to point out, though, if you have a non-occupying co-borrower on a multifamily home with FHA, your minimum down payment will go to 25%. And as I stated earlier, the FHA is the most lenient for debt to income ratio, and they will go up to a 57 debt to income ratio. The mortgage insurance on FHA, moving on to the next slide. Mortgage insurance on FHA is 1.75% upfront. So on a $200,000 loan, your actual loan would be $203,500 because they're going to take 1.75% and tack it onto your base loan amount. That's the upfront mortgage insurance for the FHA. FHA also has a monthly mortgage insurance. The monthly mortgage insurance is 0.55% per year. However, if you put down 10% or more, it's 0.5%. So it does save you a little bit there. The mortgage insurance for FHA is for the life of the loan, unless you put down 10% or more at the time of purchase, in which case you will pay it for 11 years. FHA allows for up to a 6% seller's concession. Multifamily homes are okay, and we can use 75% of the expected market rental income to help your borrower qualify. So if that property is going to rent out for $2,000 a month, we can add $1,500 a month to the client's income to help them qualify. 3 and 4 unit properties are fine. You only have to put 3.5% down. However, you do typically need at least 6 months reserves if you're buying a 3 or 4 unit property. Okay, and somebody that put this together for me, you know what, guys? I have to apologize. I think this was, I'm just realizing it now because we're getting into it. I think she actually sent me the wrong PowerPoint, that one. So let me find the correct one. Give me 1 second here, guys. I do apologize. Like I said, I am not the best with tech stuff, so. Okay, what I'm gonna do is I'm just gonna send my old Mortgage 101 without the graphics or anything. It's not pretty to look at, but it will get the point across. So, all right, guys, sorry about that. Like I said, I saw some mistakes in the PowerPoint from when they made the presentation for me earlier this week. So if you guys wouldn't mind going into the Word document that I just uploaded there. Like I said, this is very basic. This is the one I've actually used for years. So this one should be all good. And if anyone has questions at any point in time, please stop me. Always happy to answer any questions that you might have. So was everyone able to open up that Word document, Mortgage 101? Yes, we got it? Okay. So where we were going to next after we discussed FHA loans is USDA actually, okay? USDA, yes, the same guys that stamp your beef and everything, the U.S. Department of Agriculture. They also promote housing in rural areas, and the USDA loan is one of my favorite loans, quite frankly. It is minimum FICO scores of 620, have to have 2 or 3 scores above 620, but it is true 100% financing. You are allowed up to a 6% seller's concession. There is an upfront mortgage insurance and a yearly. Now, as you can see, both are lower than the FHA. This is only 1% upfront and 0.35% per year. If there is a septic, you must have a passing septic inspection for a USDA loan. There is no way around that with the USDA. If you do not have a passing septic, you are not closing with a USDA loan. The file does have to go to the USDA for final underwrite. So I caution you, try not to do a 30-day closing on a USDA loan because I've had the USDA turn around loans in as little as a day. I've had them take up to 2 weeks before. So you just want to be prepared that if the USDA is backed up at all, it may take, 2 weeks, up to 2 weeks for them to underwrite the file and get that final approval. They are very, very strict with debt to income ratio. USDA, the reason that you have much cheaper mortgage insurance than the FHA is because of these strict debt to income ratio requirements. If you have a 680 or better credit score, your ratios need to be no more than 33, 43. Okay, so 33% meaning your mortgage cannot take up more than 33% of your gross income. 43 meaning your mortgage plus all your other expenses cannot exceed more than 43% of your gross income. If you are below a 680 credit score, your ratios drop down to 29.41 for the USDA. Okay. So again, yes, it's very nice to have the cheaper mortgage insurance with no money down. The rates are great, but they are very strict with debt to income ratio, and there are income limits depending on which county it is and family size. But it could be a great program for somebody that doesn't really have money saved up. And it does need to also be in an eligible area out near you guys in Stroudsburg. I believe most of the areas out there are covered for USDA financing. Any questions so far? Anybody? Okay, keep going then. Next loan I wanted to talk about is the 203K. I don't know how many of you were on our renovation class that we did a couple weeks ago, but the 203K is a renovation loan. It enables you to purchase a home as is and finance the repairs to the home all in one loan. The purchase price plus the cost of repairs gives you your total acquisition cost. Down payment, closing cost, everything are calculated based on the total acquisition cost for that property. So if you bought it for 200, you're doing 50,000 in renovation, your total acquisition cost is 250. What's nice about these loans is we lend based on the future value of the home. Okay. We are going to be looking at the bid from the contractor, and based on the bid that the contractor gives us, the appraiser is going to take that into consideration while he's valuing the property. He's going to look at the value of the property as it is right now, and he's also going to look at what it's going to be worth once the work is completed.
Can you get that FHA 203 loan as a first-time buyer, or is it one?
Absolutely.
Okay.
Absolutely. We can do 203K loans for anybody. You don't have to be a first-time home buyer, but they're excellent loans. You know, one of the advantages for you guys is maybe instead of showing a client 30 different homes all over the place, if you know they want to be in a particular neighborhood and you got that ugly duckling listing that's not selling, well, let's do a renovation loan and let's make it their own. You know, hopefully a way for you to show less homes and sell more of them. We always say you want to sell the vision to the clients. Hey, listen, I understand this thing needs a new bathroom, it needs new kitchens, it needs a new roof. Okay, maybe it needs a new septic. All right. But this is the neighborhood that you want. It's under budget, so we can do a renovation loan and they can pick everything. Because how many times have you gone into a home and somebody just renovated it and your client's like, oh my God, I hate the color of the kitchen, or I hate the tile they chose anyway, even though it's brand new, your clients don't like it. So maybe sell them that fixer upper. Because we love renovation loans. We do a lot of them. Okay, next touch on VA loans. VA loans are for our veterans. They have to be eligible. They have to be able to show a DD 214 form or certificate of eligibility. The VA loans offer 100% financing. They do not have a monthly mortgage insurance. There is only an upfront funding fee. Okay. The first time the VA that you use a VA loan, I believe the funding fee is 2.15%. So if you were taking a $200,000 loan, your actual loan would be 204,300. It's 2.15%. That's the first use. Now, if they sell that first home and then go buy another one, the funding fee does get up over 3% for subsequent purchases. But there is no monthly mortgage insurance, which makes the monthly payment much more affordable for them. Disabled veterans can get a waiver for the funding fee. If they are fully disabled, they will not pay any funding fee. If they're partially disabled, they get a reduced funding fee. Multifamily homes are okay, but if we're going to use rental income for the veteran to help qualify, they have to be able to show they have a history of being a landlord at some point, typically within the past couple of years, in order to get that approved. So that is one of the catches with VA with multifamily is if you're going to count that rental income, you have to be able to show some sort of history of being a landlord within the past few years, typically. Minimum credit score for a VA loan is 620. Seller's concessions of up to 4% are allowed. All right, guys, and I'm down to my last couple like notes section here that I have. Home style is a renovation loan, but it's conventional instead of FHA. So it's very, very similar to the FHA 203K. However, it is conventional for people that have larger down payments, better credit scores. The home style renovation loan is great. And one of the unique things about it that the 203K can't do, you can do luxury items with a home style renovation loan. If your client is dead set on having a pool at their new house, and you find them the perfect house without the pool, we can put it in with a home style loan. That's the only type of loan out there where you're going to be able to do luxury renovation items. We are one of the few lenders out there that also offer VA renovation. We also do USDA renovation loans. Both VA and USDA renovation loans, though, total renovation cost has to be $50,000 or less, and it can't be structural. This, because most of my business is based in Jersey, I have the NJHMFA first-time buyer program on here, but we also participate with all of the Pennsylvania first-time buyer programs with the grant funds and all of that. I have closed a couple of those loans over the years as well. So we are familiar with the Pennsylvania state programs. And then we have Movement Boost. Boost is a program that Movement came out with last year, and it's essentially 101.5% financing. I'll explain that to you. So Boost gives a second mortgage to a client in the amount of 5% of the purchase price. So for example, a $400,000 purchase price, we will give them a second mortgage for $20,000. That $20,000 pays their $14,000 down payment, which is 3.5%. Okay. Plus, they're still going to have $6,000 left over that they can put towards their closing costs. The second mortgage is at it's a 10-year amortization on that. So it'll be paid back over 10 years. The second mortgage will be at a rate that is 2% higher than whatever rate they have on their first mortgage. So if their first mortgage is at 6.25% on an FHA loan, their second mortgage rate will be at 8.25%. And they can pay that off anytime if they, if they were, I've had people use this program actually where they're planning to sell their current home, but they haven't yet, and their money's tied up there. So we get them into their new home using this because it's very little money out of pocket. And then once they sold their other home, they paid off the second mortgage, paid down the first mortgage, and then I think we actually refinanced them into a conventional loan as well at that point. So the Movement Boost is a great program. I'm a big fan of it. We don't have to send it out to anybody for underwriting. All of it's handled in-house. So yes, we can close them in 30 days or less. And that's the Movement Boost. 5% second mortgage, which really means you're getting 101.5 financing. And we also offer the AMI products for first-time buyers. If you're under 120% of the area median income, you can get a rate reduction of up to 0.5% on your interest rate for first-time buyers. It's called AMI, area median income. And that's pretty much all I have for everybody today, unless you guys have some questions.
I had a question about the FHA 203K loan.
Sure.
So I've been doing some research on it, and I just wanted to know like your insight as far as like there are contingencies when it comes to income. However, as far as choosing between the standard and then the limited, how would you determine that like for your client?
Good question. So there are two different 203Ks. All right. You have the standard 203K, and then you have what's either called a streamline or limited. Okay. The streamline or limited, nothing structural cannot be included. Okay. Nothing structural. If you're doing this one, you may not be required to use a HUD consultant. Okay. So you might be able to save a couple bucks there if you don't want to hire a HUD consultant, even though I always recommend that you hire one anyway. The streamline or limited has to be $35,000 or less in repairs, not structural. And keep in mind that $35,000 has to include the contingency reserve. The contingency reserve is when we get the bid from the contractor, whatever it is, we're going to tack on 15 to 20% extra to make sure that we do not run out of funds for this project. Okay. If it's something structural, they'll typically tack on 20%. If it's not structural stuff, it's normally 15%. So if you had a bid for say $30,000, that's really $34,500 because we have to add on that 15%, and then you're just underneath the limit of $35,000. And they are going to be increasing the limits shortly. I'd have to get you the information on that, but I believe they're going to be increasing those limits very soon.
Okay, great. Thank you.
Yeah, sure, no problem. In fact, while you got me on that, I'm going to see if I can't find it real quick. Yeah, it's currently at 35,000, like I said, but there is talk of them increasing it. I'm going to check with the head of our renovation department because I remember him talking about that a few weeks ago, and they're talking about increasing those limits on the streamline. So.
Okay, got it. And I guess that would be determined upon where the location is and everything, as there are parameters for specific areas.
No, for the 203K, that's not area specific. You can do those anywhere.
Okay, got
Yeah,
it.
USDA is area specific. The USDA, you have to be careful. It has to be in what they consider to be a rural area. Now, most of the areas out near you, I'm pretty sure, are covered for the USDA. But it's a great program. Like I said, just have to be prepared for that final underwrite with the USDA. It might take them a day. It might take them 2 weeks. So if you're doing a USDA deal, do yourself a favor. Not less than a 45-day closing with USDA loans.
Got it. All right. Thank you, Joe.
Yeah, happy to help. Anybody else? All right, well then I guess we're going to wrap it up here today. Please shoot me a text or email if you would like to get an invite for List Reports. To send the invite for List Reports, I do need your email address and cell phone number. So please make sure if you're emailing me to include your cell phone number, and if you're texting me to please include your email address. And if anyone has any questions, please feel free to call me anytime on my cell. I'm always available. Anything else? All right. Thanks for coming. I really appreciate it. Have a great day, everybody.